So by the end of this video, you'll be able to start Forex trading the right way so that you don't make the mistakes that I've made in my first 2 years of trading. So if you're new here, I've been ranked #1 in the Singapore Nationwide Trading Competition, graduated with a finance degree from Singapore NTU, and spoke in various countries over the years. And these overseas talks are all free and managed to help a lot of traders become profitable. So let's get into it. The first thing, most important thing, is a step that most beginner traders skip because they watch something online. Maybe a Forex trader bought his mansion using Forex alone. Whether it's rented or not, we don't know, okay? They watch all these get rich quick things, then they skip this step, which is to put your head down and study the Forex market. Basically, learn all the basics, what drives the Forex market, what are the common terms, how to manage your risk management, trading psychology, technical analysis, fundamental analysis, which I teach on my trading channel. What drives a specific currency pair? What are the fundamental drivers that drive yen? What are the fundamental drivers and other markets that will affect dollar? Because each different currency, not many people tell this, is driven by different unique factors. A lot of Forex traders, they just treat a currency like it's just a ticker symbol on the chart. You are trading a country's currency. Remember that. Just like how a lot of stock investors, they just treat a stock like a stock that exists on the chart only. But they are investing in a real business. What is a pip? What is a leverage? What is a spread? Put your head down for 1 year, at least 1 year, to learn all of this, build the basic foundation. And when you are here, you are a level 1 trader, beginner trader. So later I'm going to talk about how you can reach level 2, level 3, okay? Because I'm going to go to the next tip. It's set your trading goals. Now I can tell you this, okay? I know a lot of Forex traders on social media like to preach to you, oh, when you become a millionaire in Forex, you can sit back, relax, enjoy the 5-star hotel lifestyle forever. I can tell you based on my experience, you can become a full-time trader, you can reach there. For the first week, it feels amazing. Don't need to answer to a boss, don't need to deal with toxic colleagues, right? But then after that, it's like, okay, now what? Retired in my 30s, then now what? So your goal shouldn't be, I want to make $1 million in Forex. Now that is a side goal that you can have, but the most important goal has to come deep from inside you, because otherwise, if you focus on money, you're gonna quit. That goal has to be within you, like, I want to give my family a great life. So if I give up today, my family won't be able to have a good life. Rather than, if I quit Forex, I wouldn't be able to earn 1 million. Okay, fine. I'm fine with being comfortable now. You see a difference? So define your trading objectives and risk tolerance, write it down, okay? What are my trading goals? Do I want to bring my family to travel, help charity more? Do you want to use Forex trading to contribute to your retirement funds? Or do you want to generate a side additional income in addition to your job? Or do you just want to accumulate wealth to buy a house in the future or a car in the future? Now don't believe it when people tell you, you gotta quit your job to trade Forex. Don't do that for now. If you're not proven to be profitable, keep your job. It is possible to work full-time and trade part-time, okay? Remember, trading is not a way to become rich fast. But if you put in the patience in the long term, the power of compounding, it's going to grow your account exponentially. At the first few years, I can tell you, things are going to be a little bit slow, but then when you put in the time, effort, patience, it's going to grow and the markets are going to reward you, okay? Next thing you will do, determine your trading type. Now it's okay to experiment if you don't know what kind of trader you are, because there are 4 types of trader types that you can choose from. Scalping, day trading, swing trading, position trading, okay? I'm going to explain what are all these stuff. So scalping, for beginners, I don't recommend. Because for scalping, you're trading 1 minute time frame, 5 minute time frame. Some traders look at 15 minutes, but things are going very, very fast, and hence you're very vulnerable to be subjected to slippages. And also, when you keep on opening trade, closing trade, opening trade, closing trade, you're gonna pay a lot of spread, so it's not ideal. And a lot of hedge funds, they use algos to trade, to scalp the market. They're a lot faster than you, so it's like, as a beginner, try not to get into scalping. Day trading, you will close your trade before the day ends, okay? So the time frames you're gonna look at is 1 hour, 4 hour time frame. Then for swing trading, you're gonna look at 4 hour time frame, 1 day time frame, daily time frame, then the big picture, which is the weekly chart. And you're gonna hold your trades for a couple of days to a couple of weeks. Now, if you're working full time, you got no time to monitor the charts, then swing trading is something you should consider, okay? Then for position trading, will be super long term. So traders would hold their trades for weeks to months, and they will rely a lot on fundamental analysis. So you can understand that these 4 types of traders, the shorter the time frame, the smaller the time frame, the more you're gonna rely on technical analysis. The larger the time frame, the longer you hold your trade, the more you're going to rely on fundamental analysis. But regardless of which type of trader you want to become, you gotta still look at a little bit of both. There are some traders who just entirely rely on technical analysis, some traders entirely rely on fundamental analysis. So you gotta find your style. As a beginner, experiment with a demo account, find out which one you're more comfortable with, then eventually you stick to that. And once you've decided, okay, this is what I want, these are my goals, now create a trading plan. Treat trading like a business, okay? So with any business, you have a business plan. So now with trading, you gotta have a trading plan. Inside a trading plan, you gotta include a couple of things. The first thing, when should you enter a trade? List down the criteria. This has to happen, this has to happen, this has to happen. And when should you exit your trade? This is very important too. How much are you going to risk per trade? 1%, 2%, 3%. As a beginner, try not to risk more than 2% per trade. What strategy will I use? Which currency pair will I trade? Will I be trading stocks too, commodities too? Now, as a beginner, to make things simple for you, try to trade the currency pairs with the lowest spreads, with the highest liquidity. So for example, the major pairs, start with the major pairs. So when you're more experienced, you can go to the minor pairs. But for exotic pairs, I wouldn't touch it. Personally, I don't touch it because it's not liquid enough, so the market doesn't really move much, and some more the spread is very high. Another thing you should include in your trading plan, when should I trade? Now, depending on the country you live at, because I live in Singapore, so I trade during the London, New York session. And these are coincidentally the most liquid sessions, because the Asia trading session is not that liquid. So if you live in Asia, then you can just wake up in the afternoon and it's still okay. But if you live in the US, then you got to wake up a little bit earlier to trade the markets. Now, something that a lot of people don't tell you, okay? In your trading plan, you gotta include when should you trade, right? But also include when should you not trade. Under what conditions? Should you stop trading on Friday night because you are busy? Write that down. Should you not trade when you are angry, depressed, because you know you are not going to do smart things? Write that down. Should you not trade during Asia trading session because your currency pair during that session is not that stable? Write that down. Next thing, choose a reliable broker. Now, there's a 10-step checklist that you need to go through for you to say, okay, this is a good broker. There's a lot of criteria, but the main things you gotta understand is that a good broker has to be regulated by the good authorities, okay? So that when you make money in trading, you can withdraw it and your funds are safe. Don't just choose a broker because of the low spread, because nowadays a lot of brokers, they are very competitive with each other. So of course a lot of them would have low spreads, but not all of them would be properly regulated. So make sure you check the regulations properly, okay? Then once you have picked the broker, then you're gonna open a demo account with them. Now, a lot of brokers nowadays, they offer very simple beginner-friendly trading platforms like MT4, MT5. Then some of the brokers also offer integration into TradingView, which is what I used to. Now, one very important thing about demo account, I know a lot of people say demo account virtual money is not that representative, but it allows you to familiarize yourself with the trading platform. Let's say you're completely new, at least you know, okay, what button to press, what button to not press. When you press this button, what's gonna happen? Place at least 25 trades, minimum, bare minimum 25 trades in your demo account before you go live. Now I don't mean like you gotta trade 25 times a day to hit that 25 amount, because one very important thing is that to determine whether your trading strategy works, you gotta put it through various market conditions. Because if you only trade and test your strategy during a phase of economic growth, when the economy is growing, what happens if the economy is going to a recession? Will your strategy work? So you gotta put your trading strategy to that litmus test. And also very important thing, I know demo account is virtual money, so a lot of traders would sometimes not treat it seriously. So because I'm a competitive swimmer, I still is, okay? Not the best one actually, because sometimes I lose, sometimes I win. What we always preach in competitive sports is every time we train, we gotta practice just like we play. So when you are practicing, pretend that you are competing. You're doing the real thing. So when you're practicing in the demo account, pretend that money is your hard-earned money. And if you're not making money in the demo account, don't move to live account. Don't. Trade for at least 6 months. At least 6 months. When you're profitable, then you start a live account. Don't skip this step, because I know a lot of traders, again, they are going to skip this step so that they can earn fast money in real account. So when you're proven to yourself, okay, now you start a small live account. Now you're at level 2, okay, because you're sort of like a competent trader right now. Begin with a small live account. I don't care how much money you have, start small so that you get accustomed to trading live. Don't over leverage. I know a lot of traders, they like to over leverage. And also don't put in money that you cannot afford to lose. I've seen so many traders message me these past few years. Karen, I put in my rent money to the Forex market, now I lost everything, so can you give me some money for my trading account? If losing that amount of money will cost you your groceries for next month, don't put in that money. Don't trade. Because when you put in real money that you really need, then you're going to be super emotional. You're going to force trades when you shouldn't force them. You're going to break your trading plan. You will see the difference. You put in money that you don't really need, okay, extra cash money, and money you need to pay rent with. You will see and feel the difference. And to grow your live trading account, make sure you master risk management. Okay, I've said this so many times on social media. The top traders in the world, do you think that they have super high win rate? You might think they have super high win rate, but the top traders that I've talked to, okay, I've been speaking in multiple hedge fund events in the past few years. They invited me to speak there. I realized that top traders have something in common. They might have a win rate of 40-50% only, but their risk management is super good. That's why they can earn a lot of money. Whereas a lot of retail traders, what do? They like to chase the high win rate, perfect trading strategy, then they completely ignore risk management. You ask them, how do you calculate lot size? Just whack. Just key in a number. Don't need to calculate. And that's why they lose money. The best traders in the world are super good at risk management. They are risk managers first, traders second. And you know, a lot of retail traders, they wouldn't appreciate risk until they learn it the hard way. Even for my university finance degree, my professor kept preaching about risk to reward ratio. Manage your risk properly. Manage your Sharpe ratio, meaning your risk adjusted returns properly. Everything is about managing risk. You know, hedge funds, they have a special team where they hire just to manage risk. And yet as retail traders, most of them have to blow their account before they be like, oh, you know what? Now I realize the importance of risk management. Once you're able to master risk management, trading psychology, then you become a level 2 competent trader. But if you want to go to the level 3, then I'll share with you in these few tips. And the next tip is to get a mentor. Now I don't care who you learn from. You might not like me. You don't want to learn from me, it's fine. But personally, I've spent more than $60,000 just to learn about the financial markets. Of course, this includes my finance degree, but also the various courses that I've bought, some good, some not so good, some super good. Then also, all the books that I've invested in, I'm still buying books every single month. And I can tell you, investing in myself saved me thousands of dollars. The cost might be only $1,200, but it saved me from losing $3,000, $4,000 in the markets. I know a lot of traders, they are not willing to invest in themselves because, you know what, a lot of people like to say, all the trading gurus on YouTube are scammers, cost sellers. Then figure out everything yourself. Google. It's free. Nobody forcing you to buy courses, nobody forcing you to buy books. I can tell when I get a mentor, he or she tells me, just do this. It saved me so much time as compared to when I Google everything myself. And also because as a trading mentor myself, I know that when I pay for a course, I'm paying for that person's experience. It's not just for the course video itself. It's not just for the book itself. It's for that person's experience that he took years to learn. So it saves me a lot of time. And it also gives you a lot of confidence because like when you go into the market knowing that, okay, you know, I've learned from this former investment bank trader. For sure, I'm going to be a good trader too because I learned from that. But at the end of the day, still depends on you. Okay, you decide whether you want to buy courses or not. Then the next thing, when you are in a live account, even in the demo account, record every single trade. Keep a trading journal. Nowadays, there are a lot of softwares you can just key into the template. I personally have a trading journal on Amazon. You can just get one of the trading journals templates. Don't need to think too much, just fill in whatever the trading journal tells you. I've been reading a lot of books about to become an expert in anything. No matter how good you are, you gotta consistently engage in deliberate practice. It's not just repetition, it's about practicing deliberately with thought in mind. So even when you reach a stage where you are a full-time trader, level 3 expert trader, keep learning. Keep learning. You know, I have seen traders on my social media telling me that he's not willing to read a book, just one book. If you're that kind of person, I don't think you should become a trader. You know, because I've been in this for 10 years and I'm still learning. I'm going to give you more Forex tips in the next few videos. So with that, talk to you in the next video. Bye.